Good morning and welcome back to Almus Market Mornings. It was a pretty important night for Scott Bessent's conference, especially after yesterday we flagged that two things were going to be in the focus, Iran and the US bond market. So on the Iran side, Bessent came out with what he called an economic D-Day, announcing fresh sanctions and more importantly, threatening secondary sanctions on countries and companies that continue doing businesses with Iran. So that puts China in a particularly interesting position given its role as Iran's major trading partner. And on the bond side, though there wasn't quite a follow up the market may have been looking for, Besant said that the Treasury would stick to its regular debt issuance program for now, with no changes expected before the next refunding announcement in November. So, after all the talk around bringing your long-term yields down, there doesn't seem to be any immediate new action on that front. Good morning, JK. With Besant taking a much tougher stance on Iran but holding back on further action in the bond market, how should we read last night's developments?
Good morning, Eshan. So I think what in the last few days the developments look like, US is looking increasingly desperate both on the fiscal and the geopolitical fronts. Uh, Obviously, yesterday's Bessent's press conference was the focus, but it did not give any much to the market compared to what was already rumored or was being talked about in the market. He definitely unveiled expansion of sanctions that would cut Iran's economic lifeline, but there was no specific imposition of measures immediately. It was just a notice to the world that US would be doing resorting to these sanctions on countries that see that continue to do business with the Islamic Republic of Iran. So he's saying that other countries would need to sever business ties with Iran or risk being forced out of the dollar-based financial system. Uh, Declined to identify any countries that would be targeted, even on specific questions. Also, he declined to answer. Uh, so, uh, you know, Obviously, the target is China. And Chinese financial institutions who are also facilitating the Iran oil trade. This is what the US is planning, but probably they are testing or they want more time to assess exactly what they will do going forward. That is why they have taken time till September 9. And, you know, whether they will work is very difficult to say right now because the effectiveness depends upon major countries like China, Russia, India, and other economies respecting the sanctions architecture. And China, obviously, the highest critical pressure point because of its large purchase of Iranian crude. If it does work, then world could face a more challenging issue because China could will have to import from other sources. But very unlikely, China will relent on these sanctions. So US is definitely not in the front foot as far as these measures are concerned. That is why they are announcing more as a threat than as real measures. So that is what the takeaway is. Those we will wait and see what they'll come out as real measures, immediately. And of course, for your question on bond yields, yes, bond yields have been on a holding pattern for a couple of reasons. One is we have the PCE core inflation this week, then a couple of other data like consumer sentiment, as well as the key data from the AI major, the Nvidia, which will be announced in the week. So market is just holding up for these reasons. But interestingly, while the US Treasury has not done anything specific on the bond buying program announced, there is a report which says that Treasury could tap the $1 trillion general account to fund the bond buybacks. So, market waits to see what's the real action. So far, whatever, if you look at it, be it the sanctions part or on the bond market front, US has only indicated some plans. They have not really acted on it, but these are real things they have to do. On the Iranian side, they have, if not the sanctions, they have to do something else to get out of the difficult situation. Otherwise, the sea route closure is going to have a major problem for all countries, including the US, because of the inflation. And on the bond side, the debt and fiscal situation is so severe that the US has to do something. So I think it is just by announcing something, they are testing the waters, how far the market will react. So that's how I'm seeing it. In the meantime, US is also escalated the trade dispute with Canada and imposed a 50% tariff on about 20 to 28 billion of Canadian goods, threatening similar tariff on other products as well. So while this is a limited macroeconomic significance, the risk is that dispute spreads to other areas. Immediate focus is therefore on Canada's retaliation, where they have said that they would be imposing dollar to dollar tariff as well. So the issues for Canada is that Canadian dollar is once again becoming a bit vulnerable. And for the US, the main risk is higher input costs, particularly if the tariff disrupt highly integrated Canadian supply chains, because US also imports a lot of goods from Canada. US is already facing inflation problem, and if the supply chain from Canada is affected, that can actually add to the further problem as well. So the market is now looking at the upcoming data on inflation. It could be softer, but that is already discounted because CPI and PPI were softer as well. And then, of course, we have the consumer sentiment that has been falling for quite some time, and the G- GDP data also will come, the second estimate for the quarter two GDP. These are things market will be looking at, but definitely the main focus would be on bond market behavior. And of course, the stock markets are somehow just holding up a little bit. But I think, as I said, the Nvidia's earnings report can be a big mover for the market. Generally, there is a bearish tilt in the market. Dollar, of course, has moved little, very little, in fact, in the last 24 hours, including the dollar yen. It all, shows that, when the market digests the various economic data in the coming days, as well as, market returns full liquidity from September 1. So I think we can expect a lot of action in the coming week, following a quieter week this week, but definitely dollar remains vulnerable. As we can also see the gold surging ahead once again towards 4,700 now. At 4,730, it would have gained 20% from the low that was seen at at 3,940 at the end of June. So that along with Bitcoin are marching ahead, clearly front runner for dollar's weakness. As far as India is concerned, rupee once again held in a very tight range because buyers were matched with PSU banks selling. But interestingly, while the PSU banks have been offering steadily every day, dollar INR is taking baby steps upward, and so I feel a challenge of 96 is very much on the cards going forward. And 95.80 will, of course, be an interim resistance as well, because now the flows related to RBI measures have been fully discounted, and we are looking at what brings in the flows later, whether because the bond market is not conducive for fresh flows, because global bond yields are rising. The risk assets globally are very, very vulnerable for a setback. So it is very likely that rupee keeps on a weaker footing for the time being. There's a couple of interesting developments on geopolitics from Indian side also. Chinese premier will be visiting India after a gap of 7 years, and he'll be attending the BRICS summit on September 12 and 13. That's a major breakthrough, or if not a breakthrough, it's actually a major development as far as geopolitics is concerned, as far as India is concerned. And India has also, got an assurance from Russia that there will be uninterrupted supply of, oil and other fertilizer and other products also to India. So this is also something that the Indian government has strategically planned to ensure, because going forward there can be more supply chain issues from the Gulf if the US-Iran standoff remains disrupted. So I think strategically India is getting some traction, but market reality is that the particularly from the rupee point of view, there's not much to go see the rupee rally unless we see very large inflows other than from FCNRB. Thank you.
Thank you, Jayaram. So, and just to summarize, the US is looking desperate on both the economic and geopolitical side, but no big surprises in yesterday's statements. But economic threats are getting China into the picture, and looks like the focus could be on them. But markets are waiting to see some real effective measures immediately, which we will not get given an indication of last night. And the stock markets are also just holding up, but the upcoming Nvidia results, as you mentioned, might be a push for the market. Overall, the dollar seems weak as gold continued its deep run yesterday. But after quiet this week, we can see a more active one next week as the dollar is also still digesting all the economic and geopolitical developments as we go. And coming to the rupee, it's continued to trade in its tight range as importers were seen buying against the PSU selling, and we still continue to trade at the brink of 95.80, holding as a short-term resistance before we see a move towards 96. Thank you all so much for listening. I will catch up tomorrow with a fresh round of updates. Thank you.